To smart investing. So let's talk about NVIDIA. And before I show you the number, the balance sheet and all the data that every YouTuber is showing you, I think it's important we get the story right about NVIDIA. More importantly is to understand where we sit in the market cycle and why what has happened yesterday with NVIDIA is totally normal and is totally expected. So you can see that yesterday earnings of NVIDIA were actually good. I mean, they beat the top line and the bottom line, so they beat revenue easily, but apparently they didn't beat the whisper number. The whisper number is basically what the buy side analysts of Wall Street are expecting, so they didn't beat that number, but they beat the estimate number, the publicly available estimate number. So they beat also the earning per share estimate number. They went down a bit slightly on the gross margin. I told you that the gross margin was actually extremely high with 73, 75. Now it went down to the 70, close to 70. And I mean, out of billions and billions and billions. So I think it's not a good trend to see a decelerating gross margin. So what we can see also that despite this very good guidance, very good numbers, I mean, the guidance has been good. The expectation of the company over the AI boom and the AI industry and what it can do, amazing things and so on. What has been the transformation of the economy and the way we operate. I mean, all of this has been very, very good during the call. But the stock didn't move at all. I mean, and I told you yesterday, go back to the video of yesterday. I mean, we have a video, so it's very easy to check. I told you, if this is not a massive beat, the stock is not going to move. I mean, the option market expected the movement of between 8 and 10% on the upside or the downside. I told you yesterday also on the video, but the stock didn't move at all. 1 or 2%, that's it. That's pretty flat. And I would say that this is not surprising. NVIDIA has had a huge run in 2023-24, massive run. So today the stock is priced to perfection. I told you, it's neither overvalued, neither undervalued, it's fairly valued. And to have this type of stock moving quite dramatically 10-20%, you need something exceptional to move that stock. Everything about NVIDIA is known in the market. There is nothing at all that nobody knows about NVIDIA. It's the most researched stock in the market. So what type of information we had yesterday during the call or during the earnings and on reading on the balance sheet and the income statement and reading on the reports, what did we see there that we didn't know already? Nothing. But what we can see also is that, and I think that's what is probably scaring a lot of investors right now, is that we see a decelerating or an expectation of decelerating growth. I mean, we have seen massive growth of more than triple digit growth rate. Now the growth rate come back to something more decent. I mean, still close to 100% growth, but it will decelerate in the coming future. I mean, we can see that 2026-27, a lot of analysts are saying, and the expectation is that the growth rate is going to come down to something more realistic. And so for a company like NVIDIA going down to the growth, to realistic growth rate, which is still very, very high compared to most companies. But again, it's NVIDIA, it's priced to perfection. So, and it's a $3 trillion company. So don't expect this type of company to do another 100% or 200% or 300% or even a 50% over the next 2 years. I would say that people who are looking for this type of return should not stay in NVIDIA. If you want to stay in NVIDIA to have a steady growth, steady return, and probably a pullback also, because if you see a decelerated growth rate in the next coming years, 2026-27, you will see the price will pull back. So your expectation of having good return over the next 3 years of NVIDIA is probably not so great, and you should look for other alternative investment in the market. I mean, there are many other alternatives in the market. AMD is one of them. We're going to touch it on another video. But NVIDIA, it's one of the greatest companies in the world. Definitely the leader of AI hardware sector, on the chip sector. But from an investment point of view, the one who enter NVIDIA today, they cannot expect what has happened in the last 2 or 3 years. That's not possible. Nobody wants to invest in decelerating growth stocks. Some people want. Maybe it will transform to a dividend-paying stocks, like Apple did. Maybe they will find a new technology that will revolutionize the future of AI again. But unless there is something significantly different from today, I don't think that we're going to see massive return for the NVIDIA stock. So, having said that, we can look at the numbers. This is not added value showing the number. Everybody shows the number. On every channel you can see the number. What is added value is to get your story right. Is after looking the numbers, after looking the position of the market and the mood of the market, is it a fair investment to have in your portfolio as a continuing holding, or starting to invest, or probably starting to trim down your profit and invest in some other stock that have more potential? That's the most important. That's the added value of the video. Of course, we're going to go through the numbers, but that's just numbers. Numbers that don't show you whether it's a good investment or not. If it's a good balance sheet, but everything is baked in already in the stock price, and the momentum is gone, and the market is not anymore a momentum market. So then it's all come down now to valuation. And when the market is not into a momentum phase, valuation matters. Again, valuation matters, so don't expect the stock to do well. Okay, let's go. Let's look at the numbers. So let's look now at the condensed consolidated statement of income of NVIDIA. We can see the revenue were 39.3 billion, an increase of 12% quarter over quarter, and an increase of 78% year over year. The gross margin has been 73. It's a decrease of 1.6% over the last quarter, but a decrease of 3% over year, and that's the one I was talking about during the introduction of this video, is that you can see a trend of decreasing gross margin, and this is what analysts don't like. And you can see also a trend of decreasing growth rate of revenue, 78%. Of course, it's a stellar growth rate in revenue year over year, but it's less than what they used to have, like triple-digit growth rate or multiple-digit growth rate revenue. I mean, this is what makes a big difference and why the stock has not really taken off. You can see that the operating income also has increased by 77%, and net income has increased by 80%. But again, we have been used to triple-digit growth, and this is a decelerating growth in terms of revenue and net income and earning per share, even if they are growing by 82%, but everything is baked in already in the stock price. So this figure actually highlights the robust financial performance driven mainly by data center segment, which reported record revenue of 35.6 billion. So out of the 39 billion, you get almost 36 billion only on the data center segment. So everything that is gaming is meaningless for them today. I mean, it's a 90% increase year over year, but again, it's not something that analysts were looking for. They were looking for more than that. The company gross margin experienced a slight decrease attributed to increased production costs associated with scaling up the Blackwell AI supercomputer. Operating expenses rose due to continued investment in research and development, as well as expansion initiatives. So this is again, this is all good, but Everything has been already baked into the stock price, so the stock is not moving. So now let's look at the guidance. So NVIDIA Corporation provided guidance for the first quarter of fiscal year 2026. The company anticipates revenue of 43 billion plus or minus 2%, exceeding analyst expectation of 42.1%. But if you look again, this margin of error of plus or minus 2% is not at all impressive compared to what the buy-side analysts and the street are expecting, you know. I know it's very difficult to understand, but they beat the expected guidance, but again, there is a margin of error, and it's not a very impressive beat. I mean, 43, 42.1 is very, very close, you know. However, NVIDIA indicate the gross margin are expected to face pressure in the near term due to production ramp-up associated with the Blackwell chip. The company projects gross margin to be in the low 70% in the upcoming quarter, with improvement anticipated later in the fiscal year as production scales efficiently. This projection reflects NVIDIA confidence in sustained growth driven by robust demands on AI and data center market, while also acknowledging short-term operational challenges related to scaling new product line. So you see, that's the story. That's why the stock has then moved, because of this margin reduction and this guidance that are not so impressive compared to what the buy-side analysts expect, and also the decreasing growth rate of the company over the coming years. I mean, 2026, 2027, it's a decelerating growth rate story for NVIDIA. So don't expect the stock to do massively well. I mean, it can even decrease if the growth rate is decelerating faster than the market expects. So even though the company is growing, of course the company is growing, but that growth rate is decelerating. And if you have a discounted cash flow and you expect a growth rate of, 40%, 50%, 60%, and then suddenly that growth rate is decreasing from 50 to 30%, then your discounted cash flow model is going to change. And that means the present value of your cash flow and the value of the company you are actually calculating will be less. The same if the P ratio is decreasing. And that's actually the reality of this market today. Valuation is so high. If you expect the valuation to come down to earth, and at the same time earning and revenue growth expectation are less than what the market expected, and even decelerating, then you have a recipe for NVIDIA to be stagnant at best. Slightly increasing for sure over time, but it's not going to be stellar performance. Okay, I think that's it for today. We have learned a lesson of what can be the example of a very good company with a A+ income statement, A+ balance sheet, and still not enough to impress investors. And we have understood exactly why, because sometimes expectation already priced in the stock, so they were looking for something more exceptional than what has been released yesterday, and that's why NVIDIA is not going to move. Again, you can play these stocks if you want to be conservative, and if you want to play the option market, you want to sell option against that stock, then it's perfect, because it's a very solid company, solid balance sheet, still growing, so nothing wrong with the company. But if you expect stellar performance over the next 5 years, doubling your money, tripling your money, this is not the company you should look for. You should look for other company. And my opinion is AMD is better positioned to do this type of return. So having said that, thank you very much for watching this video. And again, this video are for you. Please press the like button, subscribe, and just tell me exactly what you want me to do. And if you want me to do a specific analysis of a specific subject, just drop a comment and don't hesitate to leave me your comments. What I would say also is that the more you subscribe, the more you like, and the more you leave comment, then the algorithm can help me be more visible to other viewers. And also, if I grow my community, I will be able to offer you free training. I'm not gonna do training for 1 or 2 person. I prefer to have a bigger audience to do trainings. I will teach you many things that you probably cannot do and that you're probably gonna pay with other YouTubers, but with me you're gonna get it for free. So thank you again and have a good day. Bye.